So hello guys, welcome back to another session. Okay, I was not live for a longer time on YouTube. Okay, maybe it's like 2 weeks since I haven't put any kind of content on this. Okay, but today I'm going to explain you about the trade which I took on gold. Okay, I earned literally maybe it's like $150. Okay, $150 trade which I'm going to explain here. So these are my executions just to show that okay, these are not fake trades, these are real trades. Okay, and these are the profits and percentage, and here you can see these blue dots, okay, which are representing the what do you call it they're representing the trades which I have taken. Okay, so now let's get on to the explanation of why I took that trade. Okay, so this is the daily chart. Okay, yeah, so this is a daily chart. Let me just, yeah, so this is the daily chart of gold, and the gold has been rallying. Okay, so if you notice one particular thing I want you to notice is, see, uh, the gold is respecting order blocks. Can you see that? So this down close candles, can you see how well this gold is respecting the order block? Can you see how well it is respecting? So it went in that order block, and it exactly rejected from this level. Can you see that? Okay, now then it rallied higher. Can you see again some down close candle is created, and the market went into that down close candle, exactly touched that point, and then rallied higher. Same way again. Now at this point there's a larger gap, so we can't say anything about this point. Okay, obviously exception is going to be there, and any other point we can see. Okay, so this is a down close candle, right? It's acting as an order block in the up close candle series. So this down close candle, can you see the high of this down close candle and the low of this downward candle? Can you see this particular, how good the price is reacting at this level? Can you see that how well it is reacting from this level? Okay, so it is respecting the order block. So I saw the same formation that is happening at this point. Okay, I saw the same formation which is happening at this point. So if I just erase my drawing, can you see the down close candle? Price is rallied higher. Now it is going back lower. So it should somewhere near to this point, it should retest, right? Okay, so it should retest away from this order block. Got it? Okay. Now it means this is the level of the daily order block. If I get my drawings all back, you can see this red line is showing my daily order block. What is this 1 hour order block? I'll show you why. Okay, let's go on a 1 hour time frame. Once we go on 1 hour time frame, I'll erase everything. Okay, can you see that at this point this is the biggest down close candle and price rallied higher? So it has this particular red candle, okay, what you call it, whatever you call it, a gray candle, has the higher chance of being a order block. Okay, now this order block, can you see, I'll draw this line up to at this point. Okay, I'll draw this line from this point to this point, representing an order block. So if I get my drawings back, this particular green line, you can see, so this particular green line is representing the 1 hour order block. Okay, and the price should retest away from this point. So I went back onto the lower time frame. So my bias is that the price will touch that point and it will go higher, right? Okay, and on 15 minutes, let's go get back to the 15 minutes. We can see that on the 15-minute time frame, what happened is, this is the change in the structure of delivery, right? And I extended this forward at this point. Can you see how well? Just see the algorithmic price delivery. The highs of this candle and the lows of this candle, they are respected way too much. Can you see that? See the bodies of these candles, they're respecting that change in structure delivery. Okay, so I was expecting some kind of above movement before the price happened. Okay, before the price wants to rally. So the price has been falling. Why the price has been falling? Because there are sell side liquidity. Okay, the price will take out the sell side liquidity. Yes, it got, the sell side liquidity got taken out, and that's a very nice thing. So when the sell side liquidity gets taken out, I want the price to move higher, but there should be something for the price to move higher. And what is that something? Can you see? If I get to the 5-minute time frame zones, okay, can you see this particular highs? These are the buy side liquidities. Again, these highs, buy side liquidity, these highs, buy side liquidity. Okay, so if I get my drawings back, there are 3 levels of the buy side liquidity, but the fact is I took my trade before this buy side level liquidity is reached at this point, somewhere at this point. Okay, I'll tell you why did I take it off at this point and why my target was only at this buy side liquidity. See, can you see the highs of these candles are way too much clean? So the price, the chance of the price to go there at that point is much more higher. Got it? Okay. Now the price, because it has more chance of going that at that point. Okay, so that is the reason I set my first target at this point. Now let's see how did I take the entry. So this particular point, this green line is telling us the change in structural delivery. So somewhere at this point in this particular zone. Okay, so in this zone, somewhere in this zone, I wanted some price to show me some kind of, you know, change in the structure of delivery, or maybe some order block is being formed and some highs being distorted. Okay, so there should be some kind of market structure shift that should happen, right? So let's go on the 1 minute time frame. Once I went on to the 1 minute time frame, can you see that? So the price was falling, again falling. Okay, there's no, the high is not getting broken. Okay, so see, so at this point, when the market touched this point, the market rallied higher. Got it? So it means, according to me, whatever the down close candle is going to act as an order block. Got it? So down close candle, order block, down close candle, order block. Okay. So we can expect once the market rallies higher, I was waiting for the market to reach back to some of the order blocks, or maybe a change in the structure of delivery. Okay. Now, I was expecting the market to maybe, you know, this is the point. Let me just show you one more thing. If I go on 3 minute time frame, you can see one more thing. If I go on 1 minute time frame, can you see that? These are the down close candles, these are the up close candles, and one more thing that you could see is there's a fair value gap that has been created while the market has done a change in the structure of delivery. So this is the change in the structure of delivery, and I was expecting the market to come near to this point. Okay, yeah, this is what I was expecting as a change in structure of delivery. So this was a change in structure of delivery at 2 minute time frame, and the market has broken. It is somewhat similar to 2022 mentorship model of ICT, and this was change in structure of delivery. And I was waiting for the market to actually show me the retracement. So you remember these candles, okay? You remember these candles. Last time next time I'll put the camera from this point to this point because it hides a lot of stuff. Now these are the highs, okay, and these are changes in structure of delivery. Okay, I was waiting for the market to retest this point because it has broken that point and it should come back to the retest, because these two down close candles which are clean as compared to 1 minute time frame. If I go on 1 minute time frame, same thing. If I go on 1 minute time frame, these are the two candles, and this white candle, then red candle, then white candle. Okay, and there is very less chances that it will go back to that 1 minute order block. But when I went to the 3 minute time frame, I noticed that the order block is way too much clean, two direct down close candles without any in between white close candle. Okay, so I was like, okay, this particular order block is going to work, and yes, the price reached down. But there is one more thing, everything is not going to be perfect. The problem which I found out was, you know, I set my targets. If I go at this point, I set my limit orders at somewhere at these points. So this is a change in structure of delivery. Okay, and somewhere at this point I set my target like this. Yeah, 0.01 entry at here, and 0.0 entry at this point, then again at this point, then again at this point. I did this, but when the market came exactly at that point, at that delivery, okay, can you see there is a very little small gap at that point? You could see there is a little gap at that point. The market didn't exactly, can you see that? There is a little gap at that point, and my order was not set. But because of the really good rejection from this order of delivery, from this change in structure of delivery, there was a really good rejection which I saw. So I think, okay, before I leave this particular moment of taking a trade, I should enter. And this particular small thing is 0.01 delivery entry. You can see that 0.01 which I enter. This is the delivery at that point. But when I saw the rejection is going to be much more higher, and I saw these two down close candles being formed, I was like, okay, I don't think the market is going to reach at that point, because, you know, the delivery is way too much good. Okay, the rejection from the order block is way too much good. So it means the market is not going to be back to that point. So I took an entry of 0.10. It means 10 micro lots I entered from that, and the market started to rally. Okay, so the market started to rally higher, then it went down. Then when it came back again, it took out these tops. So let's go on to the delivery point. Okay. Okay. Now this is the point where I entered. Once I entered, let's go on 1 minute time frame and see the gyrations which I have to go through, and why did I take my target before the buy side liquidity is reached. Okay, let me tell you why did I take so. So I took my entry here, the market created low, and then it took out that low. Got it? So this low was taken out. Fine. Then the market again rallied higher. Okay, again it went back, and when I was near to 6,100, you can see once my account balance became 6,102, I took off my trade. The reason why I took off my trade is because if I go on the forex factory, there is some kind of testimonial testifies. Wait, okay, settings. So you can say at 8:30 p.m. this is an Indian Standard Time. At that point of time, you can see expect that at this point of time, before that time, okay, Fed Chair Powell is going to testify. So is the reason I knew that the market will do gyration. Once this starts, because the market is rallying higher, and once he starts speaking, the market will go in opposite direction to take out all the sell stops. Okay, so see, as soon as I took off my trade, and after nearly at maybe somewhere 9 or 9 950 or 930, the markets started going downward. Why? Can you see? Somebody who must have, who has put their stop loss at this particular point as a break even, higher than break even, they will be stopped out, and the market tried to buy sell liquidity. So just for this small point, okay, just for this small point of before I buy sell liquidity, this was the small point which I had to take. Okay, but the amount of time I had to wait just for that small stop loss to reach is somewhere at this. Can you see? It's a lot of time. So just for the 10% of my target or 15% of my target, I have to wait 60% of the time. Can you see that? So if I extend this at this point, whatever time it took, it was taking around like 56 minutes. This trade would have taken me around like I'll say 2.5 times more time. It means 2.5 hours. Okay, and the emotions you go through when you go through this gyration is going to be way too much. That is it. That is the reason I have taken my trade out from here, because I don't want to be in some kind of position when the news is going on. Okay, because gyration is going to take you out. Well, you can take another entry at this point. One of my friend took entry at this point. So this was a down close candles, right? And then it rallied higher, created a fair value gap. Okay, the entry is going to be there. And this is a change in structure of LVD. Okay, so this is some down close candle. The market went near to that candle. Okay, can you see that? If you go on 3-minute time frame, we can see that. Can you see that? How good the delivery is? Okay, down close candles. Market went into that candle. Why we are taking entry at this moment? Because this low has been taken out. So the market has swept. Okay, because of the news, it has swept. Okay, it has gone into some different direction. Now you can again put the entry back to that point and then reach for the buy sell liquidities. Okay, so once you put your entry like that, you can somewhere get another entry at this point. I was not watching the market. Once I am having the profit, why should I go back to the market again? Okay, so yeah, somewhere at this point, and this stop loss is not going to be that much long. You can put the stop loss at near at this point. The bodies, okay, the bodies are enough. You could have taken a 2.77 1 to 2.77 risk reward ratio. Okay, that is the explanation for the trade today. Okay, if you have any questions, you can ask. And I have started doing pre-market and post-market analysis. It is because of the reason whenever I did those analysis, it was enticing me to take some kind of trade if I was finding some kind of gyration, which might not happen at that time. Okay, so that is the reason I have stopped doing pre-market and post-market analysis. My back testing session, it will be continued soon. Okay, because I'm going busy right now. Till then, just see ya, have a nice day, keep trading, have a good luck, bye.